I'm Joe Brown. Welcome to Heresy Financial. Just want to give you a quick update after the FOMC meeting and press release today. And ultimately, my expectation, I made a video about what billionaire Paul Tudor Jones expected would happen and what he would do in terms of how he would invest according to what the Federal Reserve says today. And it looks like basically there was nothing substantial, nothing that was not expected for them to say today. And one of the expectations that I had was that they would not make any change to rates, and they would not make any change to their asset purchases. They still are they're prior to today purchasing at least 120 billion per month. And looks like that was true. Now, they did give lip service to in the future changing rates, and it's a little bit more. They brought forward into the closer to the present when they would change rates, and so now they're looking at as soon as 2023. By the end of 2023, having 2 rate hikes, which is sooner than what they had been saying previously. But other than that, basically exactly what I said I thought would happen, that there's lip service to getting tighter in the future, but there's no change to the actual action that is taking place here. Again, no change to their asset purchases, still at least 120 billion per month, and that 120 billion is both treasuries and mortgage-backed securities. And if we take a look here at, all right, so this is GDX. That's a gold miners index. We can see that it's down about 2% on the day. And right here at this mark is when they first released the meeting information. That's when it started to take a dive. Gold GLD is an ETF that buys gold. Same thing. S&P 500, exact same thing. Dow, Russell 2000, NASDAQ. Some of these have shown a little bit more resiliency than others, obviously. Hey, let's take a look at TLT. This is an ETF that buys treasuries, 20-year treasuries. But you can see here so those are the 1-minute charts. You can see here the moment when everything kind of started to sell off for today. You can see here if we look at a daily chart where each candlestick is just 1 day. Let's go back and look at the indices. This is the NASDAQ, Russell 2000. This is the Dow, S&P 500. Here's silver. Here's gold. Gold's probably showing the largest sell-off in terms of the channel that it's been in recently. But pretty much everything has been very muted. It hasn't, they've all shown, basically what I'm trying to say is they've all shown extreme amounts of resiliency here. And this is kind of in line with what my expectations are, that if they give lip service to future tightening, but then the market realizes action is full steam ahead, then it'll probably prompt, algo trading, things like that, a swift sell-off, and then quick recovery as that's a little bit of shaking out the weak hands, and then money piling back in. Everybody who is going to sell sells. Everybody who is waiting for a dip to buy starts buying in. That sets the stage for another drastic move up. And so ultimately what I'm seeing here is nothing really substantial. Like I said, in terms of what's probably gotten the most of a severe sell-off when you're looking at like daily movements, you're probably looking at gold here. But even that is still not much, and that's GLD. Let me take a look here. I'll throw it up on the screen here. But even gold, the gold futures still looking about the same here, and Bitcoin really not much movement at all. Bitcoin's still pretty uncorrelated to anything that happens in broader market here. So ultimately, like I said, with my expectations, basically met here. Nothing substantial coming out of what they're saying today. Lip service to future tightening when they need to. But ultimately, it's at this point still full steam ahead. And so I would personally feel very confident, and personally I do feel very confident in any inflation bets in terms of portfolio allocation. So that's what I'm seeing here. If anything else comes out, any changes, obviously I'll let you know. But that's what I'm looking at here for what the Fed said today in their latest press release, latest meeting. And that's all I have for you today. Thanks so much for watching. Have a good day.